Hey everyone, John Henry here, and today in the market psychology video, we get to take a look at big round numbers. We got to deal with $50 a barrel here on crude oil today. Really had a hard time, as you can see. It played around with it for a little while, but then just kind of left it in the dust. Yesterday, we ended the day with a relatively slow grind higher, and we were talking about a wedge that was holding the market up. Well, that formed a new channel rising higher that was something to keep an eye on. Now, we gapped up way above it, and this is where it gets kind of interesting because we gap all the way up here, and they immediately, right off the bat, they initially reject that $50 a barrel. Now, that ends up being a relatively strong bear candle, but where did the sellers go, right? The sellers couldn't even get triggered in. So we know that the buyers are at least going to give it a shot, but the sellers are immediately reacting aggressively off that $50 a barrel. The very first candle of the day told us that information. The buyers try coming in, and they couldn't even close above that high. So we see the sellers further adding into their positions. Now, the buyers try one more time, right? They give it a good push through the highs. That does close above the high, so they have a chance to break out, and they completely evaporate. Absolutely no buyers in the market anymore, and that turns around into a small, relatively innocuous little bear candle there that allows the bears to come in and drive the market lower. Now, if you weren't really paying attention to the psychology behind this, you would have missed that, right? But that's a very obvious shutdown of the buyers that turn around and the sellers sweep back in and hammer this market lower into that area of support from the channel. Now, the channel from yesterday, we do come back. We find a lot of support there. We test yesterday's high as well as the channel highs, kind of forms a little crosshair right there. Exact bounce off that crosshair, by the way. And that gives a beautiful little reason for a scalp long, knowing that you're going to see buyers come in and pop this higher for a little bit. You're not expecting a huge move back up to the highs because the sellers are very obviously in this market and they own this market, right? So we need to give the sellers the benefit of the doubt. But before we can sell again, we need to see the buyers give up, right? We see the buyers try once, they try pushing off, they push down, they try again, they push down, they try a third time, and they couldn't even trigger in this hugely bullish candle, and that's a huge clue, right? We have an absolutely beautiful signal for the buyers to come in, and they don't even take it, right? Now that's, I don't know about you, but if I see one side completely just give up after seeing a beautiful setup like that, and they turn around and get hammered lower, that is every reason in the world to be a seller looking at this in the channel, breaking back down again. Instead of a breakout, it's a break in. They're breaking back into the channel and they're looking to drive down to those lows. So just a beautiful reaction to the downside back to those channel lows. And when we get to the channel lows, guess where we find support? Right back at the channel low. Now, you don't want to be the first one to the party. We talk about that a lot. Being the first one showing up to the party is usually not the best thing in the world to do when it comes to trading. You want to wait for other people to do it for you and then get in when you have more proof. And we get that proof with this bull engulfing candle that engulfs that entirety of the next prior bear candle for a strong leg right back up again. So just a beautiful combination today of market psychology in concert with technical analysis. You can't really ask for a much better 1-2 punch than that. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, and we'll see you tomorrow.